Well, good morning. And of course, this recent November bounce is election related. There's really no other explanation for a 5 or 6% move in a matter of weeks. But there's also underpinnings for positive outlook on stocks. And we think the biggest macro issue is technology. We continue to see benefits in tech-enabled companies in almost every industry, how they lower cost and how they bring efficiencies, and that leads to higher profits. And if you are looking at a stronger corporate earnings environment against the background, this new Trump policy of continued low taxes, and we're going to also have a more benign M&A climate. We're not going to have as hostile an FTC against almost every merger that comes down the pike. And then you offer lower regulations, which will lower costs. That is an incredibly powerful combination, and we don't just see that as a one-month wonder. We see that as an underpinning into 2025. Of course, there are unforeseen issues. There's always market risks, and there's the markets at a high valuation. But those are massive underpinnings and why this rally is justified.
What's your outlook with what the Fed's going to do the rest of the year? Do you think they'll cut? Do you think they'll pause here, given how hot the economy and the stock market is right now?
It's a great question, and I thought the initial 50 was a bit aggressive. And now with a new mandate for growth and pro-growth policies, there is a risk that they cut into a growing economy. We also have seen some wage pressure. Still, wage growth year over year is still in the 4% range. I understand inflation is sub 3 or in the 3% range year over year, but wages have been stubbornly high. We're in a growth economy, and those are concerns. However, less regulation and technology both fight inflation, and those are mega powerful trends. If we can get regulation out of every level, when you build a home, when you open a bank account, et cetera, there are so many layers of regulation. Those go away, costs drop, and that's going to be huge. Taxes drop, that's going to help consumers. So we think there are two conflicting forces here for inflation. We'll see how they play out.
Real quick, what are you expecting from today's number? The CPI is the bigger market mover. This morning, it is expected to be up again.
We think that wage pressure has kept prices from dropping as much as they would, but the overall trend will remain softer. We'll see a number the market can live with, but it's not going to be near that 2% Fed target range.
All right, we will leave it there. Mark, great to get your insights. Thank you.
Good to be here.
Mark Avallone.